I'm joined with Morgan Lekstrom here at the Red Cloud Mining Showcase 2024. Morgan, thanks for joining us.
Thanks.
On the heels of a big acquisition for NexGold, are you going to remain CEO of NexGold?
Well, I'm president. I'm president right now, but yeah, it's a big acquisition. I mean, we've more than doubled the ounce count in the company. We're now becoming, on closing of this, we will be the most near-term mid-tier developer out there that doesn't have a producing asset. So both projects are in the final stages of permitting, and we will have construction decisions and which one moves forward in the new year. So you're gonna see a lot coming out of this company now.
Okay, so walk us through our audience here. NexGold, what's the assets now look like as a consolidated package? You guys have a mill, right?
No, not yet. No,
Okay.
We're two development stage assets. The idea of NexGold was always to form a mid-tier path with 1 to 3 projects. So we had Goliath, that's 3 million ounces of gold, 2.1 in the M&I category, a nice path to 110,000 ounces per year. And we said, we need a pipeline. You know, don't want to just develop one asset. This is a Frank Juster strategy that has worked over and over and over, is aggregating assets into a pipeline, build them, and you build a mining company. They did that with Wheaton, they did it with Endeavour. You can get the idea of where we're going with this. So you now have Goliath with Northwestern Ontario, 3 million ounces. Feasibility, bankable feasibility in Q1. Expansion drilling happening there now. Construction decision Q3. You have Goldboro, which is in Nova Scotia, with permits at the same level or even more advanced than Goliath. So you'll see a lot of news come out on permitting there. You'll see a lot of news on the First Nations come out of there. Also 3 million ounces, 2.5 million in the M&I category, and already showing massive expansion potential. So there was a debt overhang on that company. So when we acquired this, there was a $21 million debt overhang. We've restructured the debt in both companies. So when you combine them, there was 27. There now is 12 million with one company with a 30-month term. And to keep that in mind, we are less than 12 months away from project financing packages. So we've got a 2.5x time multiple to get this done. But now we have a clear path to 200,000+ ounces a year.
Wow. Okay. So then now, so we're talking about permitting. We're talking about some pretty large resources. How do you guys actually get to that next phase, which I just brought up, the mill?
Yeah.
What is it? How does that work?
So the next phase is obviously getting the final permits in, which we expect fairly soon on both projects. Yep. And I like to say in the mining space, fairly soon is like within a year. So within 8 months, we're there. The next phase is the pre-construction and into construction on one of the projects. Right now, we're going to run them in parallel to see which one we build first. We're not building 2 at once. Both are sub 400 million capex. So we are looking at them going, you're almost done permitting on Goldboro. You're almost there on Goliath with the First Nations as well on both. Let's get them to the phase where we can say, which one do we build first? Which one is most accretive for our shareholders to be built first? And have the second one in the pipeline ready to go.
Okay.
So that's when we build the mill.
Now, you don't got a crystal ball, I don't got a crystal ball, but let's just say that gold continues to do what it's doing and we're trading above $3,000 in the new year and we start to see capital flow in. How quickly do you think you can move forward and start pouring gold?
Look, I mean, the builds take between 18 and 24 months to build them. But I'll have to say this. When you look at the two assets individually at 2150 gold, they're both $600 to $700 million MPVs. When you put them together at even $2,500 gold, which we think is going much higher, this is a $2 billion MPV company that with low risk projects to build.
And what's theoretically the deal closes? It hasn't closed yet, right?
No, it closes on mid-December, early to mid-December.
So the deal closes. What would that market cap look like today?
Well, so we're raising 11.5 million on that. That's, trust me, way oversubscribed. I would never have gone out on a raise that wasn't fully subscribed. It's a Frank Juster company it's going to be well positioned money. I'd say our biggest shareholders are taking a big chunk of that. Okay. I can't tell you exactly how much, just from a disclosure purpose, but that market cap will be anywhere between $105 and $120 million. Now we're at a market cap of 60. They're at a market cap of 24.
Okay.
You can imagine that we're trading at an MPV to our NAV, our NAV to MPV when we close at like 0.09. Our competitors that don't even have permits are trading at 0.2. They're not competitors, they're peers. So you can understand there's a potential re-rate that's going to happen, especially now that we're a bigger company.
Okay. So last question for you here. I hear the investment thesis. I think it's compelling, high level, back of the napkin math. That sounds attractive. What am I looking out for out of the company over the next year? What should I be watching out for?
So you're going to see drilling at the Goldboro asset in Nova Scotia, significant. I mean, they've already proven that there's massive expansion potential there, and you can see it. You can go on their website, it shows it. We're going to be converting that. We're going to be updating their feasibility study on Goliath, drill results, permits, First Nations agreements. You can imagine that the news flow is going to get pretty significant over the next short while.
Okay. Well, Morgan, congratulations on the transaction. Knock on wood that it closes.
That'll close.
And I appreciate you taking the time to catch up with us.
Yeah, thanks a lot. Appreciate it.